Okay, so let's move on to the next group. Whether we want to think about whether it's DeFi, whether it's revenue, let's call it revenue generating applications, stuff like that, which is a different way of valuation because you move away from Metcalfe's law and go into more traditional valuation models. Talk us through that whole sector.
Well, I think
Hyperliquid's at the top of that as well, but it seems that Hyperliquid is valued off Metcalfe's law and not the revenues, which has always been my point, is that if you are a fast-growing, deep network, then you get valued on network effects. Amazon never got valued on earnings.
Yeah, so the multiples that the market pays for smart contract platforms versus applications is huge. Like the difference, what I mean. So the premium for, I don't have the data here, but like Hyperliquid and Tron are based on their fees. If you want to use that as the metric or revenues, are the cheapest smart contract platforms by a country mile. Solana is trading on, I don't know, maybe 100 to 200 times fees or revenue. Ethereum is on maybe 300 or 400 times. And then Hyperliquid's basically on like 11 or 12 times. Tron's but maybe on 6 or 7 times. So it's like massively different. And that's the market. I think with Tron, that's the market pricing the risk of the network. So I think there's some rationality there. Hyperliquid started as application, now it's a chain. So now it should be, valued much more on sort of Metcalfe's law. And it's playing out. That thesis is playing out because, it was a one application business. Now it's a network and other people are building on it, like Morpho. And I think it's Morpho, which is a large lender protocol, which is doing really, really well. Our competitor to Aave is building on Hyperliquid now, and so are some of the other sort of high quality applications. So it is creating network effects. So it should be valued on a Metcalfe's law sort of basis, and I think it's it's very undervalued. But in terms of those other DeFi protocols, like there is definitely an argument to be made that they are sort of mispriced, the good ones, relative to smart contract platforms. They're trading on sort of multiples around 5 to 20 times fees. Which in terms of like compared to like TradFi, it's these are not eye-watering multiples, and I think that's why, when Franklin Templeton set up a team and like all these other traditional fund managers come in, they're going to look at some of these protocols, see how fast they're growing, see the multiples that are levied on them are not the sort of maybe eye-watering multiples that they were led to believe or they thought they would see when they come into crypto. And, they start making allocations to it.
It used to be called, back in the 90s, we used to have, you either bought the growth stocks, and you actually outperformed always. And those people who wanted to be more traditionalist would do something called GARP, which was growth at a reasonable price.
Yeah.
Which is what they're doing here. I can see it. I mean, even the hedge fund managers we deal with at XPAM, they kind of gravitate towards this because you can build a justifiable thesis around valuation because most people don't really understand the Metcalfe's law stuff.
Yeah.
But to me, it underperforms still. I mean, Uniswap may be amazing, but it's never going to outperform a layer one. So you obviously like this video enough that you've got to the end. That's quite a big task. But listen, do me a favor, hit the like and subscribe button, and also check out what video's next, because I think you'll love it. But if you want even more, and when I'm talking more, I'm talking about member-generated ideas, incredible alpha, research, everything there to help you in your journey, just head to realvision.com/join for the best financial intelligence out there and the pure alpha that's within the platform.